Hey everybody, welcome to my channel Young Buffett, where I talk about various stock market related things and give various investing advice. Now, I am not a licensed financial advisor, so take everything I say with a grain of salt. Today I'm going to be teaching you guys about three major indexes in the world. Obviously, you have the S&P 500, you have the NASDAQ, and you have the Dow Jones Industrial Average. Now, you may be asking, what is the S&P? What is the NASDAQ? What is the Dow? That is what I'm here to talk about with you today. These are the major indexes in the stock market that you should be well versed in when going to invest in. These indexes can boost your portfolio, make you build your wealth long term, and can even help you gain passive dividends if you take the advice I'm about to give you. All right, without further ado, let's start with our first index fund, the S&P 500. Now, you may be asking yourself, what is the S&P 500? I'm glad you asked that because the S&P 500 is an index fund that contains 500 of the United States' largest companies that are publicly traded. Every big name company you can think of, Bank of America, BRKB, Berkshire Hathaway, Microsoft, Amazon, they are in the S&P because they are one of the biggest companies in America. It also is a really good indicator to see how the market is performing each year. Usually, since it has 500 of the most publicly traded companies, it's a very healthy indicator of the financial markets or it's in the United States. Now, it is a very broad sector. 500 of its best companies, that means it contains sectors from technology, like the Microsoft, Nvidia, like I just mentioned. Finance, you have JP Morgan, Bank of America, as it's two examples I'm giving off the top of my head. Energy, there's Exxon and Chevron, and consumer goods. Meaning it has a very broad selection of the stock market, making it a very good index fund. Now, I'm going to tell you how you should buy or how you should add the S&P 500 in your portfolio. Now, the real S&P 500 index, if you type it in, is very expensive with a $5,648 price tag, meaning it's not really cost effective if you buy the index as a whole. What we are going to do to add to our portfolio, you can avoid paying that big price tag by buying ETFs that track the S&P 500 that still give you exposure. Some great examples of ETFs that do that are VOO, the Vanguard S&P 500 Index, SPY or SPY, IVV, and SPLG. SPLG is a little bit of a cheaper option. And now, these are way more affordable alternatives than buying the real index, and you still get exposure to top companies. The most expensive one here, I believe, is IVV, coming at $500. While it is around $500 to $600, while it is pricey, it's much cheaper than that $5,648 price tag you would be paying if you bought the index fund. So, without further ado, we're gonna go to a reason of why you should buy the S&P 500 index. Now, this is why you should buy the S&P 500 index. As stated before, it gives you exposure to 500 of the U.S.'s best companies. I'm talking like Microsoft, Apple, and Berkshire B, and many more that I could list forever, but we don't really have the time. You want to get this because, as I mentioned earlier, it is a great way to build wealth. I mean, as you see here, it shows constant growth. It's up a good amount year to date this year. And outside of global pandemics like COVID and financial crisis, it has been green. Like in 2008, it was down, but there's a global financial crisis like that. So that is why you should be look to add the S&P 500 index to your portfolio. For our next index fund, we are going to be seeing the NASDAQ. NASDAQ. Now, would you be asking, what is the NASDAQ? And the NASDAQ is like the S&P, it has a good amount of companies, except the NASDAQ has 3,000 companies. And unlike the S&P, where it's broad and has various companies, the NASDAQ is primarily focused in technology sectors. The NASDAQ is where you can see companies like Apple, Microsoft, and Nvidia in the index and other really high tech companies. This is good because it gives you access to a lot. This is good if you have a certain need for technology in portfolio, and it does provide a very good concentration of a specific sector. How you should add the Nasdaq index to your portfolio. Similar to the S&P, we are going to go to an approach that we're going to buy ETFs because, like the S&P, the Nasdaq is really way more expensive than the S&P. One share of the Nasdaq index costs you $17,000, and I know most of you watching this video do not have $17,000 to spend on one share of an index. Now, what smart investors do, meaning smart investors do, which I follow, the Nasdaq should be bought by ETFs that track it. So these ETFs are way less expensive than the Nasdaq index, and you get the exposure to the same companies that are in the index. But now there are two choices of which ETFs you buy. There's QQQ and QQM. QQM tracks the 100 highest market caps in the index, while QQQ tracks the index as a whole. I think a mix of both of these will be good for your portfolio. Now, we are going to go into why you should buy the NASDAQ. You should buy the NASDAQ because it gives you a great exposure to the technology sector, as it has the world's best technology companies such as Apple, Microsoft, Alphabet, or Google, as it's more well known, and very more. The NASDAQ has been shown that with all these great technology companies and with the boom of AI technology, it would be a great buy going forward, meaning it has great returns and has great potential with growth, especially with all tech companies in it. The Nasdaq does something the S&P doesn't provide, and it does provide exposure to global companies. One company that I can think of off the top of my head is Spotify, European-owned company that it will give you access to, and it gives you the diversification that in your portfolio that the S&P 500 doesn't. So that is why you should add the Nasdaq to your portfolio. Now, for our next index fund, we have possibly the oldest index in the United States that's around today. We have the Dow Jones Industrial Average. Now, the Dow Jones was first founded on May 26, 1896, which is a very long time ago. Now, it's the oldest stock market index, as I previously mentioned, and it also represents 30 largest companies in the United States. Now, something interesting about the Dow is it's price weighted, meaning the more expensive a stock is, the more effect it will have, regardless of market cap. That means if a company like Eli Lilly does poorly early, it has more of an effect on the Dow than, say, a company like Apple. Well, if it does poorly, even though the Apple has a bigger market cap, it's all about the stock price. Now, if you are looking to buy the Dow, I cannot stress this enough, but you are going to want to take the approach I have been talking about for the last two index funds with how you should buy it. This approach, you should be using ETFs exclusively. I mean, if I highly doubt that anybody watching this video has about 46 grand to throw around on one share of an index fund. This is the most expensive index fund that I've mentioned so far. You should be exclusively buying ETFs with this. Now, because of the massive price tag, $41,563 as last checked, you should be buying an ETF. The best one that I recommend is DIA, which is S&P, which is a spider trust that watches the Dow. So if you want to add the Dow to your portfolio, this is how you should do it. You should buy DIA and add to your portfolio. Now, this is why you should buy the Dow or the Dow Jones Industrial Average. As mentioned before, it has the largest 30 companies in the United States. This will provide you with multiple blue chip stocks that will continuously add growth and value to your portfolio. It's been shown to be less volatile than other index mentioned, since it's primarily composed of the 30 best U.S. companies in the United States. It tends to be a little less volatile in market fluctuations. Except when you see financial crises and pandemics that happen. Now, it has been a great way to build wealth over time. It's slow over time, but you will see in potentially 20 years, you will see a good amount of growth added to your portfolio, showing how the Dow would be a great investment for you. Now, this is what I would do with all the information given. With this information present, what I would do is you should invest in the Nasdaq and the S&P, and I would advise you stay away from the Dow for the near future. You can later down the line, if you feel you can want to invest in it, that's your choice. But this is what I would do, and obviously you can make your own decisions, but this is my takeaway from it, and this is what I would do given the information. My advice is to invest in the Nasdaq and the S&P 500. The reason for this is the stability of the S&P outside of like COVID and like 2008 financial crisis. Is the S&P has been in the green, and I think it's very stable and provides great stability for your portfolio. And the reason why you invest in Nasdaq, obviously you get a great concentration of a specific sector of technology, which I think with AI booming, it'll only continue to rise and continue to show great returns for your portfolio, and it also gives you global exposure, something that every portfolio needs and shouldn't be limited to the U.S. The Dow's price weighted index is a turnoff for me because I feel like it could be a little hard to navigate and puts more faith in specific companies that could have more turmoil going on, and it just doesn't work for me. I feel like the S&P 500 provides you with better diversification and more access to sectors. The ETFs I recommend if you are investing in this is VOO, which is the Vanguard S&P 500 Index Fund, and QQM for the Nasdaq. I feel like these ETFs will help your portfolio grow in the long term and hopefully make you a lot of money. Alright, well, that's it. I hope you guys really enjoyed the video. This is my first YouTube video, so I would really appreciate it if you like it up and subscribe and drop a comment down below saying what you want to see next or what your thoughts on this video were. Did you like it? Do you think I could have done something better? Let me know in the comments down below and just have a blessed day. Alright, see you in the next one. Bye.